All right, good evening, people. We should be live. Just give me a quick confirmation that you can hear my voice okay and that you can see my screen. Hopefully today's audio won't be cutting out, so if you can just give me confirmation that everything is working well. I know we had some hiccups last week, but touch wood, all being well. Looking at all the connections, seems to be working fine. Yeah, everything good, perfect sound. Awesome, great stuff. Excellent. All right, let's kick off the stream. As always, a special thank you to OK Exchange for partnering with me. I'm a product partner at OK Exchange, so work closely with the team in terms of their platform. And as always, anything said in today's video is not financial advice. It is just my view of the market and purely for educational purposes. Essentially, how I trade, how I view the market, and essentially just, like I said, just to give back to the community in terms of what my thoughts are. Okay, right or wrong, it's more or less for you guys to make your own informed decisions. I can only share what I hope is beneficial for you guys. And I've been streaming for the best part of nearly 4.5 years. So without further ado, let's kick off. Before I kick off, I just want to quickly go ahead and talk about the private group. It's kind of been delayed, but you know what? Good things come to those who wait. So unfortunately, a few of my guys were off sick in terms of it's just put a delay on the development side of the website. But nevertheless, I should be having a date to pin down at some point in middle of February. For those of you who are watching the stream for the first time, just as you all are aware, I've been trading for the best part of almost 9 years. I've been in the crypto space since 2016, 2017. I don't run any paid services. I don't run any paid groups. This is not a paid service or a paid group. It's a free private group in partnership with my exchange sponsors. I'm going to be running this completely free. All I ask for you guys is just to sign up via the referral link. Hopefully launching at some point in the middle of February. Not a signal service, not financial advice. And like I said, any income received from the referral links will be given to charity and given away to the community or those members who have signed up. I'm not looking to profit off any referral links. I trade. I've had a very successful career so far. So the last thing I want to do is start creaming money from referral links. It's not what I'm after. Okay. So in terms of the streams, it's going to be 2 to 3 private streams a week, just for a period of 4 weeks. Like I said, we will delve further into the fundamentals of price action, order flow concept, basics, how I use that. We'll look into those as well, and then covering how to think about trade execution, what some of my trade execution systems look like, to give you a template to go away. Trading systemization and trade planning and life cycle. I just basically, what I don't see people talking about is a process. And what I'd like to do is not necessarily cover my process because it is quite in depth and I think it could be overwhelming for the many of you, but it's giving you guys a foundation that I'd like to see people go and take, adapt and evolve as a trader. And in 2-3 years time, just come back and say, hey, Exo, you know what? Thank you for sharing that. It's really helped. That's literally it. I'm not looking for anything else, anything more. Just a quick pointer as well. February will be the last of the weekly streams. I will be taking a break from March from streaming. I have a few personal private projects that I'm going to be working on for the foreseeable future. But that's not to say that I won't be streaming on the odd occasion. Maybe once a month I may just rock up on the streams and push some content out. But February will probably be the last set of streams, unfortunately, as much as I enjoy streaming, but time out for me. And I think it's often you find markets in Q2, Q3 are generally choppy. And on that note, I have to be honest, I think I've always, I've never really spoken of it directly, but I think generally when you look at the markets at the end of Q1, that's generally when markets do start topping out. So I think for myself, I've always had it in the back of my mind that I would be looking to take profit throughout Q1 and that's heading into February, March as well. Okay, the markets haven't been great. I know altcoins have been somewhat disappointing if you've been in the wrong altcoins, like we all have. We hold some altcoins that haven't really performed well. Other altcoins have gone to perform very well, but it's been a very, very challenging cycle. It's been a very, very fast paced cycle this year, so nothing's ever easy, is it? But without further ado, let's kick off on the stream. But before we do that, sorry, any questions? I know so many of you have talked about not being able to sign up with a referral link. I will be dropping a Google form or a Google Sheet on next week's stream. So those of you who have signed up, just please fill that in, and I will cross-reference those of you who have signed up and start adding you to the website. If there's any issues, like I said, just ping in. We'll leave some text box on the form for you guys to fill in, and you can just let me know what the issues are. We'll get it resolved. I'd like to make sure everything's running smoothly. If we have to delay it by a week just to get everybody on board, then we'll delay it by a week, okay? But essentially, it's just one of the last things I'd like to do as part of Q1 before I do head off and take a break and start focusing on other aspects before I come back into streaming probably much later in the summer. But like I said, I just want to make sure that everybody does get an equal opportunity to come on board and just have a real look at how I trade, my process, my system, my journal, the full works, how I map out markets from a weekly basis, how I think about trading, how I think about positioning and taking on those trades. So it's just a real insight into all of that, as well as the usual kind of what I do already. Like, this is what I'm looking at. Here's some of the levels that I'm looking at, but delving a little bit slightly deeper, but not too overwhelming. Okay. Yeah, look, don't worry about if you have KYC restrictions. We'll figure something out, like I said, but we'll talk about that on the following streams. So let's kick off on the stream. Bitcoin. I think the one thing I want to point out is for the first few weeks of January, and those of you who have watched my streams, I think, in all fairness, I've been very, very pleased with how we've traded the start of the year. We talked about longing the 88 to 90k zone, okay? I took some profits at the mid, and then on the stream, so the two streams, let's have a look. The two streams where I covered the trade setups in detail was Monday the 6th. We got the setup on the 12th or the 13th of January at that 88, 90k level. That's the level that I looked to long. And on the last stream, we talked about when price was trading round about this mid-level here. Okay, that we're looking for 110s. 110s is going to be an area where, should price trade into that level, that's where I'm essentially going to be closing out the remainder of my longs. So longed, I managed to get an average entry of 90k, took 50% off here, talked about it on the timeline, closed the remainder of the profits. This does not surprise me, the fact that we saw an expansive move into 110s. I explained the thought process, why it's going to be a sticky area with a level of, or the number of asks resting at that level, and market participants essentially aggressively longing into that level, getting trapped, price pukes, and then finally we get the pullback into a key level that I've also marked out on the previous stream, which was that 96 to 98k level. This zone here is what I want to see price come back into. We finally just about touched it. Is the low in? We'll cover that on today's stream and how I'm looking to trade the market over the next few days or week or so. Okay, but overall, very, very pleased. So if you want to go back and check out those streams, understand the thought process, the reasoning, the mindset, and also the sentiment. I talked about the fact that when price was at these lows, watch for the sentiment to become very, very fearful. And equally, what do we get? Sentiment becoming overly bullish at the highs, and talked about it on the timeline that you're going to see Bitcoin potentially reject off this level. It's a good area to hedge, take some profit on your longs. Again, I'm not talking about spot positions here. I still hold a spot position, which I have hedged out at the 110s, but closing the long trade is essentially what was more important to me than thinking about hedging out and watching the fact that price couldn't really push above the 110k level. And I had my reasons. I saw the level of asks there. They weren't getting pulled. Every time price pushed up into that 107, 108 level, it got sold off. And eventually, with the news, with NASDAQ gapping down over during the Monday market live session, Bitcoin obviously followed that correlation into that demand zone at 96, 97k. So that's kind of a summary of everything that we've discussed throughout January. Now, moving ahead to February, what are my thoughts? Looking at the market, I think let's just take a step back. I don't know why, for the first time more than ever, and I think it could be bear market PTSD, but I find that there's a real tendency of everybody trying to be a hero and call the top. The top's in, get out of the market, take profit. Then you've got the other crowd that's talking about the top's not in, Bitcoin's going to go to 150, probably 180 by the end of the year. At the end of the day, people can talk all they want. All that matters, and what I've discussed on the previous streams, is I couldn't give a flying fuck what people think. All that matters to me is that you can call the top all you want, but what did you do about it? Did you trade it? Did you get into position? You know, that's all that matters. You can call markets. Everybody's a great chartist. Everybody's great at a finger in the air. I think the top's in, right? But okay, so what's the action? What am I doing with that information? It doesn't tell me anything. What I care about, and if we want to start talking about calling tops, let's just assume that, you know, I've hedged out Bitcoin or I shorted Bitcoin. Number one, I don't know if the top is in. It could be in. And if it is in, then great. I'm very, very lucky because one, I got to take profit. Two, if the market breaks down, I can then claim, hey guys, look at me, I shorted the top and here's my P&L screen. Okay, as opposed to keep rhetorically talking about why I think the top is in, where, you know, is it actionable at the end of the day? And if it's not, I really don't care. But that's not to say be neglectful, because again, if you are looking for signs of weakness or signs of strength, you need to identify exactly where you're looking to do business, why, what do you need to see, how are you looking to get into position, or how are you looking to get out of the markets, where are you going to see signs of weakness, where is there a reason to be cautious at a certain level. We're not talking about being bearish or being bullish. I'm not talking about investing for the next 5 years, hold XRP or Bitcoin. I'm primarily a trader. I'll have some spot positions, but if you watch my streams long enough now, I'm not going to tell you that Bitcoin's going to go to 180k by the end of the year. It doesn't do anything for me, and it probably won't do anything for you. If you're holding spot and you think Bitcoin is going to go to 180k, who gives a flying fuck if it's next year or in 10 or in 5 years time, you know? That's all that matters. If you're an investor, you're an investor. But here, I'm just trying to talk about trading as a career, trading as a living, and how I view the markets. Okay, so I just want to make that very clear. Now, objectively, when you look at the markets, now that I've had my rant over, or a little ramble, when you look at the markets, the first question I want to ask you is, what's all the commotion about? We've been here for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 weeks. Almost 11 weeks within this range between 90k and 107. The very first question I want to ask you is, what's the lowest weekly close that we've had in this period? It's down here at 93k. So what's all this commotion about, all this noise about that price is off, you know, 10k from the highs, and now all of a sudden everybody's panicking out? There's nothing to be, as far as I'm concerned, you know, there's nothing really majorly to be concerned about. I don't see a shift in trend. All I see is a range-bound environment. We've covered how to trade the extremes of the range, and this is essentially where I've wanted to do my business, okay? That's all I focus on. I've had 3 trades on Bitcoin in January. Range low, take profit at the range highs, hedged at the range highs, and the long on Ethereum as well, okay? That's all we've done. So objectively, when you look at the chart, I just see a lot of commotion and noise, and there's really nothing significant happens on the charts, okay? I think what's happening out there is that because altcoins are getting absolutely annihilated, it's kind of adding to that emotion of, you know, the market's fucked, Bitcoin the top is in. And I think that's just a result of the fact that, well, when you look at it solely from a Bitcoin perspective, it's doing very, very well still, right? You cannot definitively say that the top is in, and equally, I don't want to definitively say that I think we're going to go higher. The honest answer is I don't know. I don't have an answer to that question. And all I can do is just act upon the information. So looking at the chart just on a weekly basis, could the top be in? There's a decent argument for it. I think probability-wise, it's fairly low case without further information. Equally, is the low in for the month? Or is the low in for the year? I don't know. But equally, like I said, if there's a long opportunity setting up, then I want to be thinking about, if you look at the direction of the trend is up, consolidation, the trend is up, consolidation. Until I see a definitive reason as to we get a break out of this range bound environment, can I then for certain say, okay, the probability has now increased to the downside? Now, that's not saying I'm becoming bearish here. I recognize that perhaps longing on the way down is not the safest option, just how shorting on the way up is not the safest option. So you have to go with the flow of the market. But as we're in a bracketing environment, cut out the noise, focus on the extremities of the range. There are some very, very good trading setups on Bitcoin and the broader market for that reason. Okay, so that's just point number one. When you look at the weekly close, the lowest weekly close that we've had is nearly just under 94k. Yet prices are 101. Nothing really to say that I'm overly bearish or I'm overly bullish. I'm ready for any scenario, any direction. And I know exactly where those levels are that I want to position for that. So currently, as I stand, I hold my spot position, which I'm hedged against. We've longed the lows. Like I said, 50% off at the mid, close out at the highs, okay? I have not taken a perpetual short on Bitcoin. Any questions so far with that? But when you look at this, like I said, you can't really derive much from this information at this moment in time. The second aspect is, you know, I'm not really into this type of structure or pattern, but when you look at this, I have seen these resolve to the upside. I don't know what this structure is called, what this pattern is called. I'm not really into these types of patterns, but I think, look, what if we get another push up into this level? So you've got, you know, one drive, a second drive, and a third drive. We covered this over the previous streams. Just watch out for that scenario as well, okay? Let's just, whilst we're here, whilst we're talking about the higher time frame, let's look at the trend scanner. On the weekly, again, there's nothing here that's screaming to me that the trend is significantly trending to the downside, that we are in a heavy shorting phase or risk-off phase. So the 12 weekly EMA price is respecting above that level. The 25, you know, we're clearly above that level. So the trend is still to the upside. Now this is where, how I think about distribution tops. This is what I want you to pay attention to. Quite often, right, you will see price action, you know, base after a bear market base for many, many months, rally, reconsolidate, rally. And it's here where people start calling a tops in. But essentially what generally happens on, not all the time, but what can happen is you'll just get a range being developed and it'll keep people guessing that the sentiment will become bearish here, Bitcoin's fucked, we're going to break down, and up here, Bitcoin's going to go to 150, everybody high five. And essentially all that happens is this. And until you get either an up thrust after distribution or an up thrust, and then you get the break back inside the range, that is the point where you want to start being cautious. Not bearish, but cautious from the perspective that you want to lock in whatever gains you've made here. There's no harm in taking a hedge or a hedge short or an options play or taking some profit, because you now know that your invalidation point is at the high. You now know that there's a potential risk to the downside, back to the mid or back to the range lows, but you don't know for certain if it's going to break down. But if it does, well, guess what? You've got your insurance, you've got your protection, you're covered to the downside, as opposed to pissing away your gains on Bitcoin, okay? So the second part that I want to talk about is the moving average. Let's just do this in a different color. What you will find, and this is where I start paying attention, is when you have a set of bands, is that the moving average trails price and eventually the momentum dissipates, okay? Look at the velocity of the moving average. Trajectory and the gradient of the moving average is steep. It's accelerating higher. And eventually in these range-bound environments, that's when you see the momentum of the moving average dissipate and you start getting this chop and range. And like I said, people start calling tops here, but yet there could be another thrust. So what I want to say is, for me, calling a top is not about a specific price. It's more about a structure. Recognizing what structure is Bitcoin playing out. Is this a possible or a probable case for distribution? Who gives a flying fuck whether you call the top here or whether you call the top here or call the top here? All that matters, the market doesn't care whether you called it. The market doesn't even know about your positions. It doesn't care about your emotions. All the market cares about is what the market wants to do. It doesn't know who you are. So you have to be respectful of that and just understand that the structure that you're looking at is, all right, where do I need to pay attention and what are the chances of this being a probable distribution range? And if it is, then you want to start thinking about, all right, if I'm taking profit here and I'm wrong because I thought it was distribution, at which point or how do I get back into that trade? Okay, so they're kind of the key takeaways, but the key aspect is the trajectory of the moving average, which I'll talk about now on Bitcoin here. So where I would start leaning towards a possibility or the probability of a breakout is in a case scenario where the moving averages starts doing this. Okay, the bands start compressing, price is doing something like this. Maybe we get a third drive into 120, and before you know it, the bands have crossed. This is on a weekly time frame. You've kind of got your confirmation here. If price trades below the bands and it's short-lived, you can go bullish again. Just like we did here, okay? We covered this. If you remember throughout Q3 and Q4, when the majority of the crowd were talking about Bitcoin is making lower lows, lower highs, lower lows and lower highs, this is bearish. The very thing I stated was that it's in a range. It's not a trending environment. When you have a range-bound environment, market structure on the higher time frame is insignificant, just as it is here. It doesn't matter whether there's a lower low, which there was here. Now we've got a higher high. What does that tell you about market structure? That it's very choppy. It adds a lot of noise within a range. A market structure is very clean when you have a clearly definable trend on the higher time frames. So context is what matters more. Structure is what matters more, okay, in this instance. And looking at the structure, like I said, I'm not saying this isn't distribution or this is distribution. I'm saying to you, I don't know. But what I'm looking for is a possibility or probability that over the next 2-3 months, are we entering a phase of distribution? Even if that means price going higher into this 120 zone, then what? Do we come back down? And this is, it falls back into this range. Then you've got the compression of the bands, and eventually we get the rollover, the shift in market structure. Then you need to start thinking about, yep, this is probably going to retrace much deeper down back into that 70K level that Arthur Hayes is calling for, okay? But for now, what I want you to understand is structure. That's the key thing here. Without really getting into this whole argument of bearish, bullish, it's over, it's not over, it's back on, you know, bears are fucked, bulls are fucked. It's irrelevant. That's all, okay? It's very, very irrelevant. So the two moving averages on this time frame is the weekly, and this is what defines the context. Now, there's a way you can front run, not essentially front run, but really get a good read of what's going to happen on the weekly from the 5 days. So you're looking for that cascading effect. And when you look at the 5-day, 12 and 21, again, that looks fine to me. I don't really have any concern. Where the concern comes in is in these environments. And if anybody who's followed me long enough, right, I'm kind of infamously known as a bear, or X is always bearish. I call bullshit, because one thing I am good at is managing my drawdowns, managing risk to the downside. That's the first priority. The first priority is locking in your gains, capitalize on your profits, and realizing your profits. If you can't take profit, how are you going to ever see your account grow? Okay. And then I think about, all right, now that I'm thinking about taking profits because I don't like what I'm seeing, it's only then that I can think about, all right, there's a possible risk the market's going to break down. That's when, you know, the shift when I'm fully allocated back into cash, because I'm seeing this divergence. I'm seeing price, you know, compress, break down. Now look at the bands. At this point, I'm cautious, because I don't know if we're going to go higher or we're going to break down lower. But if it's going to reject off the mid of this range, then of course I'm going to take that short. Did I know ahead of time that I've nailed the top? No, I never even called the top. All I know is that I've positioned for it. I think there's a risk to the downside. Therefore, this is a very logical level to be short from a risk to reward perspective. The rest is history. And I was very, very vocal back in April about taking profits on altcoins, and then, like I said, in a matter of weeks, you had a significant sell-off on Bitcoin. Same again happened in 2021, October, November. It was a very clear, obvious sign to get out of the market, okay? You've had 2 attempts at this level. Again, this wasn't me calling the top. This was me saying, right, we've had rejection and failure of this level. I'm getting out of the market. And then I started proceeding to short from 59, 60K all the way down to 17K. That wasn't a single short. That was multiple shorts back inside a trading range where you can take longs and shorts, swing fail off the highs, trend continuation lower down. So the key to nailing a top is not calling it. The key to nailing a top is understanding where the market is likely to reject from and giving yourself a chance to, or giving yourself downside protection such that if this is deemed to be the top, then you've got coverage to the downside. Okay, you've thought about taking profit or de-risking, because as price is trading up to this level, yes, it's easy to get carried away and think that's it, Bitcoin's going to go higher. But what if you're wrong? Okay, what if you're wrong? What are you looking for? How are you going to identify that given scenario, and what does that mean for your P&L, your portfolio, your altcoins, your Bitcoin? So really thinking about structure. And again, nailing a top is, like I said, just to reiterate, is not calling it. It's positioning for a possible downside risk, and if it happens to be at the top, then great. Okay, so that's kind of the point that I wanted to make, is that get away from this obsession and reading people's timelines about a top being in. It's really about giving yourself an opportunity or a chance to, one, avoid any drawdown, and two, to potentially make some profit on the way down if it's going to break down, and three, accept and understand where you're wrong and why you're wrong. Okay, so looking at the 5-day, there's no real concerns. Looking at the 3-day, again, no real concerns. Yes, there is a level of momentum slowing down, but that's kind of expected as we are in a range band, and I certainly believe that we will continue being range bound, at least for the best part. You know, we've got Wednesday FOMC. Next week, we've got QRA on the 3rd of February, so I'll cover that on Sunday's stream. But until then, I just think we're going to see continued chop heading into FOMC. And if the FOMC does prove to be, you know, beneficial for the markets, then we probably will see a shitload of hedges unwind and price spike higher again, okay, back into that 110K range. The daily doesn't really tell me much. In a range band environment, when you're using the trend scanner, it's just chop. And all this chop does is just define, and it tells you that we are in a range band environment. Any moving average trading strategy on the daily or lower is likely to get chopped in this environment. Where moving average strategies do well is in a trend. Okay, so again, I'm probably expectations are more or less the same. I think we've had a fairly good reaction today from that 97 level that I talked about on the previous streams. For now, I don't have any position on my futures account. Like I said, the only futures position I have is a hedge against my spot, and I don't really call that a directional trade. That's just me hedging out my risk, which we talked about on the previous stream. Okay, let's look at some of the oscillators before we delve onto the lower time frames. So again, looking at Bitcoin, there's nothing really too concerning at this level, at this moment in time. Let's look at the stock RSI to begin with. I think this is an interesting development here. The fact that if we were bearish, or let's just say Bitcoin had real weakness or significant weakness, then with the RSI oscillating lower back into this mid zone, I would have expected a much deeper pullback on Bitcoin. The fact that the RSI has topped out and is oscillating lower, yet price is holding up in a range, is somewhat of a positive sign for me. Okay, as opposed to the RSI topping over and rolling down, and with it comes price. So I alluded to the fact that if we're going to see Bitcoin push higher into this zone, then it will be backed up by the stock RSI turning around from this midish level, just like we saw over here back in 2021. Price corrects, okay, and then ramps back up and goes even higher. That's what I'd be looking for there, okay? And even still, okay, where you can get caught up on the noise is that if you look at Bitcoin back in 2021, when it was in a distributive environment where if you look at the momentum had slowed down especially on the 5-day or the 3-day. You can see you've got a 3 drives, 1, 2, 3 drives, probably with a bearish divergence. But when you look at the weekly, from this point, whilst the stock RSI was hovering lower, we got this slight kink. And what did Bitcoin do? It went from 34 to 60K in a matter of 1, 2, 3, 4 weeks. Okay, so don't rule out that possibility that, look, even if we have a slight pop up on the stock RSI, we could very quickly over the coming weeks or several weeks get a move into that 120 zone. So don't rule that out. So that's why I say just be balanced. Like, don't get into this whole debate about the top is in or the top isn't in and Bitcoin's going to go to 70K next. We can talk about 70K once we get below the lowest weekly close of the year, which is 93K. After that, we've got a level of support, which is 85s. If that gives in, then the probability increases. You cannot say with certainty that I think Bitcoin is going to go to 70K in the next several weeks from this level, okay? If you do, well done. But did you trade it? Probably not, okay? So just something to watch out. The other scenario where if we are likely to remain range bound for longer, then what do you suspect the stock RSI will do? If we're likely to remain within this level of 92, 93K and 110K, then at that point, it's quite probable, and I think it would be very healthy for the next leg up if the stock RSI comes into the lows, Bitcoin is still holding this range. This will lead to an oscillation higher. If it does, then it increases the probability of trading that 120, 130 level. So that's all there is on the weekly. When I look at the 3-day, we've just come off the lows here. So again, this isn't something that I want to fade. The only time I want to be fading this is at these highs here. When you look at the daily is oscillating to the lows. So essentially for a long setup, where I normally like to time the market is ideally watching the daily come into these lows again, just increase the probability. Should this come into the lows and prices are at a very respectable level of demand, then I think it increases the probability for a potential long setup back towards 110. Okay, so that's kind of what I'm looking at on the higher time frame and how I'm thinking about the markets. And the fact that we've got FOMC, I'm not sure how that's going to resolve. So therefore, I'm not rushing into a position. When we look at the RSI on the weekly, again, nothing really to gain from this. Okay, when we look at the 3-day, still above the 50 level, still remaining positive. I'm still looking to attack the market from a long side. I'm still looking to hedge out from a short side. So again, key difference, I'm not looking for directional shorts. I'm looking to hedge out my risk on my spot, which, like I said, if Bitcoin is going to go above 110K, then I'm going to close out my hedge short against my spot and let it ride up into that 120K level. Then we'll see what happens after that. If it breaks down, I'm covered to the downside. Daily, still coming into that 50 level. So this is really what I want to see hold. If you look at this, the entirety of this range here, it trades below the 50, shows strength back above, the market rallies. Okay, so dipping below 50, but reasonably not going any lower and showing strength back above 50 is the momentum that I want to see for a possible push back to 110s and potentially higher. Okay, so that's all there is on the main two oscillators that I look at. MACD I sometimes have a peek at. It's not really something that I look at from an actionable point of view. Yeah, there's a slight bit of concern on the daily. When you look at the weekly, nothing really compelling. This could go sideways for the next several weeks until we get a definitive loss of momentum. Then we can think about lower prices or buying potentially from levels lower down. You can see what happened in 2021. You can see what happened in end of November 21. You can see what happened on 15th of April at these highs. We got that corrective move down. Essentially, we saw strength backed up with the fact that this was likely to be the breakout. We got the breakout, pushed up higher. So for now, there's not really much we can defer from there or infer from there, I should say. 3-day, yeah, nothing really that I can infer from there. And again, the daily is just too much of a lower time frame. I'm much better off looking at price action. Okay. Now, in terms of trade setups, when you look at the heat maps, here's what I'm thinking. Now, this is a loosely held opinion, so don't take my word for it. If I'm going to have a probable guess, do I think the top is in? At this moment in time, I'm just going to give it low probability. But what really matters to me is understanding the levels that I want to trade. When I look at the market, you can see that we've come into... There's a decent set of demands at this 97k level. Okay, that's the level we defined from several weeks ago. And if there is another push lower down, and we take out these poor lows here, if we get this and back above, I'd probably have my invalidation here, and that's going to be my aggressive trigger to go long, where I'm looking for a move. Sorry, just give me 1 second. Where I'm looking for a move back into the 110s, okay, and possibly higher. Oh, I don't believe this. Fucking, there we go. All right, okay, so that's the factor of setup that I'd like to see. So we've got a key level of demand at 90k, but immediately when you look at where bids are stacked and where bids are absorbing any selling off and the market's holding up, it is that 96 to 98k level, okay? That node there is what I'm looking at. That's on the BTC USD futures, okay? Moving on to the spot market. This is slightly more interesting as well. When I look at this, I'm just waiting for the data to load up. We have a stack of bids, resting at that 106, 110k level. So what I like about this is the fact that we are in this bracketing rotational environment. You can clearly define or see that we have these clear highs at 110, and we have a level of demand at that 93 to 88k level. And I suspect that if this is going to be the local low, then that is going to provide a good long setup to at least take out these highs. And that's kind of the setup that I'd be looking for if we are going to move higher. What gives me some level of concern is when you look at the book depth on the sell side, there's asks stacked up heavily all the way to 120. And when you look at the bid side, you know, so could it be that we get another push up before we get a larger correction? Possibly. We just have to be open-minded. It just depends on how or what data we have to work with at that time if we are likely to trade higher over the coming weeks. I just want to go back onto the perps book. 1 second. There was something that I saw earlier. Yeah, here it is. So again, when you look at this, you've got a level of asks resting at 110. Given that these don't get pulled and the market slams into these aggressively, but is unable to push higher, then again, is it that we trade 112s and reject them before we get a deeper pullback? Or do we push up, shallow consolidation, and then attack that 120 level, that 125 level, okay? Which is kind of confluent with the with these highs that I've marked out here. So that's kind of where I'm leaning towards. Are we likely to see one more push up between now and the end of March? Any pullbacks is what I'm looking to long, and I want to attack 110s, and then if we can clear that, or we get a shallow pullback, push up into that 120 level, and we'll see what happens after that, okay? That's kind of what I'm thinking, just looking at the heat maps. You can see there's some fairly decent book depth on the bid side, but really the spot book is what makes me wonder if we are getting to that point now in the market where, you know, are we likely to start topping out somewhere higher up? Remains to be seen. Okay, at least heading into Q2, heading into the end of Q1, and then do we get that larger correction in Q2, Q3? Which again, I'll cover those points on today's stream. So that's all I have to infer from the trading light charts. Looking at that key level of 97s. Now, in terms of the actual trade setup, then, like I said, if we do get...
I've not been talking about long in this. We finally got the pullback into this level. I think we see something very similar to this. Okay, I'm looking for one more push higher.
Sorry, not sure what happened there. Is everything working fine? I just got some feedback off my own feed there. But just confirm, if you can give me quick confirmation in the chat, everything's working fine. I'm not sure why my own audio switched on. But okay, so in terms of trade setups then, so let's just get straight to the point. This was the zone that I wanted to long. Am I going to get another retest off that level? I'm not sure. It could happen, but if it does, that's where I want to be thinking about long in the market, essentially. Okay, so whether this was just an overreaction of the overnight news and Nasdaq gapping down, I want to make sure that if we do trade this zone again, then the clear level of setup that I want to see is give me a sweep of these lows, get back inside, stop our invalidation there. Really don't want to see it go below 96. I'm going to look to aggressively long 98, above 99 and 100, continuation. Let's go for these highs, okay? So I think if it's going to go for those highs, it's going to be a very, very fast move. Very similar to what we saw here, that if we are fortunate enough that we get a pullback, I'm looking for a structure like this. So shallow pullback, stock RSI at the lows on the daily, RSI probably resets, shorts start piling in. You want to see shorts getting trapped here. So if you're watching the tape on Naga, large market shorts opening into this level, unable to push price. The minute they're offside, they're going to puke. You're going to see that fast move up, and then long start chasing the momentum. You get that fast move up, filling in all this shit price action that we've had for the best part of the last several days. Okay, that's kind of the trade setup that I'm looking for. When it comes to the top side, I wouldn't be comfortable shorting the market if price is looking to go back towards those highs. Okay, so if for whatever reason, if this is the lower zone and we get a move back up here, I wouldn't be comfortable thinking, oh look, deviation, short this, because we may just get a shallow compression and then really run hard. So kind of that, like where you've got one drive, two drive, I don't know, two drives, three drives pattern. Okay, that's what I'd be looking for. Then I could think about, all right, I think this is looking somewhat exhaustive and we might get a deep correction back down into 90k. Okay, that's a long way off that. That's just literally nothing actionable, but how I'm thinking about the markets. Where I might be, so where am I invalidated? Where am I wrong on this possible idea? It's essentially if price does come into this level, okay, we do get a reaction and it's weak, it's short-lived back above this level and it breaks down, I have to get out of the market, okay? The key, because then we're back inside this key trading range where you can see from the 15th of November all the way through to 13th of January, albeit this short-lived price action above this composite, that's where the majority of the price action has been. So if we do push up, you know, if we are fortunate with a pullback that I want to long and it goes higher, great, win. If we do get a push up, but we fail back inside, then we're back within that bracketed rotational range bound environment. Am I looking to short this? No. Am I still have I still got my head short against my spot? Yes. Am I then looking for lower prices into this demand zone? Absolutely. Okay, that's then the next level that I'm looking for. Are we going to see another lower low before we get a move back up into the mids and then back up into the highs again? Who knows, right? But essentially, the key point or the key takeaway is looking for the extremes of the range, where I'm using the mids as a key pivotal inflection point that if I want to get on board, that's what I want to see. Take out Monday's low, get back inside Monday's range, long, get back above the key mid-level of this range, continue with the long, looking for higher prices back to 110s, okay? If it breaks below the mid again, then all bets are off. Final scenario, again, if we see price over the coming days, just assume that this is a lower high in terms of price recency. We've taken out these lows. This is a lower high. We get a lower low, underside rejection. Then we're probably looking at that 91K level to think about where we can potentially long from, okay? Question is, would I be looking for shorts from here? No, I think, like I said, I covered the short scenario. If you took the short, congratulations, well played. Don't forget to take some profit, because if you do see this scenario where price trades into this level and reclaims back above the mid, then your short is in danger. And for those of you who think you've nailed the top, you're in real danger that you could get ripped out. So what you want to do is just make sure you've got a tight stop above here, because if this moves and it takes off, you're probably going to get blown out your position. The good thing is that if you are in a short and you think this is the generational short for you for the next few months, then how I would look to handle that scenario is I would have a very tight stop above here, and such that if the market does squeeze above and take you out, take the loss. You know that if price does get back inside and reject and then roll over, you can always get back into the market with a stop at this high. That increases your probability of downside risk, okay? Or nailing the downside. So that's for those of you who are adamant that this is the top in. That's certainly how I would be looking to play the trade. Tie stop above 110s. If it stops you out, you have to accept it, all right? That's all there is to it. So other markets that I'm going to cover today is Ethereum, XRP, and Solana. So we'll look at Ethereum, ETH BTC. When will those fuckers at the ETH Foundation stop selling? And when they do, maybe we can finally get a rally. At least just give me this much. That's all I'm asking for. In February, can we please just have 4 fucking weeks of not selling and just rally to that 0.44, 0.45 level? And I think if we do, then again, I'm not going to call alt season. I haven't called alt season at all. But what I think it does give you is a window. And this is a key phrase, okay? Not alt season, but a window of risk on opportunity. A window of risk on opportunity, albeit for 2 to 3 to 4 weeks. That's it, okay? Because if you look at how fast prices have been rotating back and forth, if you look at PopCat, WIF, if you look at GOAT, if you look at Fartcoin, the volatility is great. And especially if you can trade the market both ways, then brilliant, okay? But just the nature of how this market has been effectively musical chairs, if you're looking to hold a position at this stage in the market for many, many months, I think you're asking for trouble. I really do. So ETH BTC, again, this is kind of the zone where I hope sellers are exhausted. Again, if you were to think of this as a market that you were looking to risk off or short, then I would say, you know, why is my mouse retarded today? All right, if you're looking at this from a market point of view, and you're looking at this from a short, are we going to see one more spike up and then we get the drop? Okay, there's got to be a reversion at some point. You'd hope or you'd think, but for now, that's what I'm looking for. When we move on to ETH USDT, again, question for those of you who watch the streams: what did I talk about specifically on the previous stream? Trader Morin, if you're watching the stream, you should know this, because this is essentially how we nailed this trade here. I think I alluded to the fact on the last week's stream that, guys, in all honesty, I think Ethereum is not ready to push higher. When you look at this, and I think, let me just, yeah, we were around about, I think we were around about here somewhere, maybe 16th. It was the 16th that I did the stream, somewhere here. And I said, guys, I'm not convinced that this is ready to take off yet. I think we could see one more correction lower down, and I had my reasonings, because if you looked at the weekly stock RSI, right, the daily was pulling in lower. It's bottomed out. Great, that was the point. Okay, so it's, again, when you look at the weekly though, at that time this was hovering down. So what I said was that ideally, if we can hold this zone here and this oscillates lower down, then I'm looking to attack the market again. So I just felt it required several more days, or another few weeks of corrective price action at that 29k level. As long as 29s can hold, then I'm already positioned in an ETH. I've got my spot ETH position from the wick down that we had. Okay, I filled in at 3,000. If we get another push down, I'm looking to add to that position. So rolling it forward now, you can see that we've had somewhat of a corrective move back down, taking out these lows, and again, it's holding fairly well. It's still holding fairly well. And if we are likely to play out that meme pattern of, is this an inverse shoulder, head, shoulder? Then what I'm looking for is for price to trade back up to 4,000. If we can get up there, it gives us a chance of trading back into the all-time highs, okay? That is what I'd love to see, and just silence all the Ethereum critics. And hopefully we'll get 3 to 4 weeks of some green price action on altcoins. So for now, I think the risk to reward favors looking for longs over the next week. Like I said, we've got FOMC on Wednesday. I am positioned to the long side. It makes logical sense from a risk to reward perspective. Again, when I talk about, look, if you want to get bearish and you think the market top is in, but what if you're wrong? You need to give yourself a chance of understanding where there's a clear risk to reward level. And for me, it's this zone here. For as long as we are essentially above this level, any wicks below it is fine. As long as we're above this level, I like the risk to reward to the upside back towards that 4,000 level, or at least to 35, 36 as a first objective, and then into the 4,000 level, okay? So that's what I'd like to see. And again, when you look at price action, since March, the majority of the price action has been range bound. It has been rotational. There's not been a trending environment on Ethereum. So again, calling for the fact that, the top is in on Ethereum, we could break down to 2,100. Yeah, it could happen, but until we lose that 2,700 level, this SR level here, then for now, I'm just thinking that I'm looking for buying opportunities. Break this corrective slow bleed down, just like we did here, and you get 1 to 2 to 3 to 4 weeks aggressive expansion to the upside. Because you've got a lot of shorts piling in or hedging, you look for those fast expansive moves back to the upside. Okay, so with some patience, I've started, like I said, positioning back into Ethereum. I'm looking to add to that position if I see fit. If we start breaking down, then I'll have to cut my initial spot position and look to rebuild lower down. If we break below this key level of 2,700, then I think it increases the probability that, yeah, all right, we're likely to go to 2,100. But like I said, we've got this key level of support over the next week, something that we can work with. Okay, so TLDR, I'm still looking for longs on Ethereum. 3-day at the lows. Weekly, where is that currently? That is at daily rolling over. So again, if we do get something like this, I'll probably add what I'll give the confirmation is a breakout of the trend line and then go back to that 4,000 level. Okay, that's what I'm thinking. Solana. Well, what can I say about Solana? Everything I set up, everything I prepared for came to fruition. We talked about longs from that 170, 180 level, targeting the 300 level. I took the trade. My spot position had been from 120s of the lows. I've sold it at 275. That's all there is to it. Is the top in on Solana? Again, when I talk about tops, I'm not talking about a specific price point. I'm talking about a structure. At this moment in time, when you look at the weekly RSI, when you look at the daily, it's hovering lower. It's difficult to say. I can't rule out the possibility that, first things first, we are still below the high of November 2021. We've had 2 attempts at trading above that level and closing back inside. So implicitly, because of that, it's the core reason as to why trusting my instinct that this is going to be a very tough level to get acceptance above. And therefore, I sold all my Solana. When I say all, I'm talking about 90% of my Solana at an average exit of 275s. For me to get back into the trade, it would have to be from lower down, if I'm really honest. It would have to be from this zone. The problem with that is if my expectation that Bitcoin is going to go higher, or I'm looking for longs on Bitcoin and I'm looking for longs on Ethereum, if Bitcoin doesn't give me a pullback into 90K, then there's no way, well, there's a very low probability that we even trade back into that 200 level, and such that at that point, when you look at this from a local range perspective, that you want to see Solana show some level of strength, and that is essentially finding acceptance back inside here. If we can do that, then I think we attack that 300 level again. And if we do that and swing fail and then get back inside, then I would say it increases the probability that yes, that might be a topping structure, but what will really put the nail in the coffin for the short term, when I say short term in terms of Q2, Q3, this is all sellers stepping into the market. Price is unable to find acceptance above here, then you're probably going to get that deeper pullback into these lows. So you got your range high, you got your range low, you've got your mid, one level to the next. Okay, that's all I'd be thinking about. I wouldn't even be thinking about Solana going to new all-time highs of 500 if we get that scenario. Now, just to add some weight to that probable scenario is when I look at Solana on the USDT pair, we've got a fair bit of supply up to 275. So where's 275 coming in at? Again, if you look at what's been capping price on Solana, it is that 275 level. Right? So if price can reclaim, if this is a correction, you can see from the heat map where demand has been established and buyers are stepping into the market and probably shorts are covering, okay, to some extent, or late shorts are covering. If we get a pullback into here and then this is the bottoming structure, I think that gives a good chance that we rip back up to take out all these highs here into that 300 level, okay? And again, when you look at the Solana on the spot pair, there's a lot of spot sells or asks resting at that 275 to 300 level. So I'm just thinking to myself that are we likely to see one more push up over the next several weeks, slamming into these asks, and then we see a level of exhaustion, and that's all we get. So one kind of final spike gets everybody excited that Solana's going higher. It slams into all these asks up here. If these absorb all this aggressive market buying and the market isn't able to push higher, it swing fails this high or it rejects under it and it bleeds away, then there is the level of cause for concern, okay? So that's what I would be thinking. And when I say, being cautious to the downside, again, I'm not trying to say the top is in. I just think that the probability of that, if we do slam back up into these highs here, and for whatever reason, we've had one attempt, two attempts, three attempts, where on a weekly time frame, what you're likely to see is a collection of wicks forming at these highs. And if you recall what I've said, when you start seeing a series of wicks at the highs, or when you start seeing a series of wicks at the lows, that's the market essentially showing strength, whether it's sellers showing strength or whether it's buyers showing strength at the market. So just something to be cognizant about, that we may get another push higher into that 300, gets everybody excited, and essentially you get that break in the trend line, then I think we do get that deeper retracement into Q2, Q3, where we can start thinking about buying from lower down. Okay, so for the foreseeable future, I think over the next several weeks or several months, if I am trading, I'm purely going to be trading on perps and futures on very, very low leverage, just because it gives me the flexibility of being able to trade the markets both ways. And this is probably the first time since 2024 January that I've, well before 20, this is probably, let me rephrase, this is the first time that I've really considered shorts in the market. When I look at SUI, for example, another one, when I look at this, and if I'm thinking about a probable top, I'm not calling the top, but a probable phase of distribution. And if you recall what I said on previous streams, that if you want to look for signs of weakness in the market, go track SUI, because once it starts rolling over, this was one of the strongest performing altcoins in the market. It led the rally on the way up. It performed significantly well. If you want to see real signs of weakness for the market where those pairs have done really well, then SUI is the one that you want to watch. Now, when I'm looking at this on the 3-day, we can see that we've traded below the 12 and the 21. And if you recall what I said about momentum slowing down in the bands, and you start seeing the bands compress and a range forming, what I'm looking for at this point to contemplate shorting SUI is one of two scenarios. And those scenarios are such that if this is deemed to be the range and we're seeing the dissipation on the moving averages, then if this is my range high and this is my, let's just say this is my definitive range low, it doesn't have to be. This is my demand zone at the range lows. There's two scenarios now that I'm looking for. Again, this isn't me trying to short the top and say that it's a bear market. This is me recognizing from a risk to reward perspective, why would I want to buy SUI at $5? Do I think it's going to go significantly higher? Not necessarily. I think time is ticking. I think we've got another several weeks in the market before, you know, the tide turns heading into Q2 or Q3. So I want to be flexible as a trader. I want to trade the market both ways. I could essentially have looked to have long this, but I don't want to take on any longs heading into FOMC. So two scenarios. If we get a push up, and I think this is likely to give a reaction, a push up into here, and this is the high. We've taken the structure or the low here. This is a lower high, and we get a lower low. I'm probably looking to do business with a stop above here. Ideally, I don't like this type of setup. My preferred setup is if we get a push up into these highs, failure to hold, even a spike up, and then looking at the volume, if we get a real aggressive spike on the volume, and this pops here and it fails back inside, and the volume is low, 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 that for me is going to be validation, shorting $5. In all seriousness, first objective for me would be back to the range lows. High time frame objective from a trading perspective, higher low, rejection at the mid, or over the mid, get back under, short again into that zone, and again 2-3 trades, looking for the trend down with the confirmation of the moving averages, with the trend scanner on the daily, on the 3-day, and potentially on the 5-day. The weekly is a bit of a slow one, so but you can already see how the weekly now, when you look at the 3-day, you can see prices just started to trade below. We're going to see a compression. When you see that compression, that kind of tells you that we could potentially be heading towards a range-bound distributive environment before we see a breakdown lower. Okay. XRP is another one that I've earmarked for shorting. So SUI and XRP are the two that I'm looking to short, in all honesty. When I look at XRP, I would love to see one more setup on XRP. I really want to see price. Okay. So I shorted earlier. I've taken some profit. I really want to see XRP give me another fantastic setup. And that would be in the form of, I want to see this low hold here. Give me a pullback into here, push back above into this range. There's my range low, mid-range, range high. Give me that. Take out all these highs. Give me the up thrust after distribution. Get back inside. Then I think it's probable that we could trade back into these lows here, okay? That's what I'd be looking for. I need to see the setup first to give me a chance of being in the trade. And I could be wrong, you know. Maybe this rips up even higher. I don't take the trade. It's as simple as that. I need to see a reaction. I need to see a reasoning. I need to see why price is being rejected at this level, what's happening under the hood. Then I'll take the trade. But for now, I would love to see XRP just go up there, take out all these stops or all these shorts that are still positioned, rip them out of their position. They're going to puke. Long start chasing this. They're going to get trapped up here, get back inside. That's a short. Looking for price to break down to that 180 level in Q2, Q3, okay? So that's kind of how I'm thinking about it. If I don't get the setup, fine. Great, everybody wins. Everybody else go even higher. Even my alts go higher, okay? So it's just ways of looking for plays that can give me downside protection, that if the market is going to break down in Q2, then if I am holding my alts, and my alts are going to shit, at least I've got some downside protection using something like XRP or using something like SUI as well, okay? So again, when you look at XRP USDT, when I look at the books, again, I'd love to see price trade into that 350 level. Okay, that 350 level there. And you can see there's a lot of demand at 260, 270, which is where we tagged, okay? You can see there's a very large node at 2.6, primarily why I took some profits, significant profits on my short on XRP. Now, I'd love to see price just come back up, take out these highs here, potentially push into that 350 level, give me a rejection from that 350 level. And that's how I'm looking to potentially short the market back down. So what I've given you today is how I'm looking to long Bitcoin and Ethereum, and how in the next few weeks, that if we do push higher, I'm looking for a rejection or weakness in the market, potentially altcoins. And if there is that rejection or weakness, then I'm looking to short XRP, I'm looking to short SUI, which gives me downside protection, whilst I still got the possibility of maximizing my gains to the upside with altcoins. And if I see collective weakness across the market, then I'm going to get out of all my positions. Like I said, I'm looking to sell into February and March on some of my positions. I do have some long-term plays, which are very, very, you know, AI plays, which I'm probably going to take partial profits and hold a bag just for the sake of having some exposure to the market, because you never know, right? What if I'm wrong? What if Q2 is bullish? What if Q3 is bullish and we don't get a correction? It could happen. I don't know. It's just all opinions, loosely held opinions at this stage. Oh, right. Okay, 1 second. Sorry. Just let me quickly wrap up with something else. So, oh, here's another reason why I'm looking for XRP shorts. It was this as well. Again, look, when you just look at this from a higher time frame, primarily, again, 2018 highs. You think I'm not going to take that? Of course I'm going to take that. Okay, into that key level of support. So again, any pushes back up into that 3. This is why I really would love to see one more wick up, spike up, reject, nasty rejection. I think that marks the top. I really think that's going to a really good chance of possibly or potentially marking, or let's just say limited upside, and there's a real significant risk of a downside correction into that 170 level. That's what I'm looking for, okay? That's how I'd be looking to play it. You've got this SR level here. If we do see weakness in the market, give me some form of rejection. I'll happily trade that down there. If it doesn't set up, not a problem. Doesn't bother me, okay? Just because EXO talked about shorting XRP, EXO's wrecked, EXO got blown out, not really. I need to see the trade. I need to see the setup. I need to take the trade. And if I'm wrong, I know exactly where I'm wrong. Above the highs. It's a small loss. Okay, point of markets. One thing I want to talk about is, let's use total 2 as an example. Right. As far back as March, April time, right? Something that I want you to take into consideration. This was from February to March 2020. This was, sorry, this period here. You've got May, so there's March, April, March, April, correction, final rally higher, and you get the breakdown. In 2020, again, in 2022, that was 21. 2022, March, April, market breaks down lower again. Market breaks down lower, market breaks down lower, market breaks down lower. In 2023, March, April, market breaks down lower into Q2, into Q3, Q2, Q3, Q2, Q3. In March, April 2024, Q2, Q3, okay? So just something to think about, seasonality-wise. If you follow macro, there's always this talk about liquidity air pockets, tax season in April, sell in May, go away. So I think if we are going to see some rallies on altcoins or some green, then it has to be in February. I'm hoping it is. And that gives us some long opportunities. But equally, like I said, I'm going to be cognizant about taking profits. That's just me being really honest. I'm not going to say, guys, long altcoins, Bitcoin's going to go to 150, stop being pussies, we're going so much higher. Just being objective. You know, I don't want you guys to suffer from significant drawdown. So just do some back testing, and it doesn't have to be in total. Just look at some altcoins, you know, like, I don't know, find any old shit like Cardano as an example. And you'll see that round about that March, April time, this rolls over, okay? March to April 2023, 24. If you look at it in 2023, March, April was the top here, sells off. If you look at it in 2022, if we've got enough data on the chart, March, April, rally in February into March. So yeah, from February into March, top, sell off, okay? So just something to think about or take into consideration. Seasonality trends. Q1 is generally decent. Q2 and Q3 can be quite choppy, can bleed, you know, so hopefully we get some good price action for the next 4 to 6 weeks. I'm optimistic, but I'm also very cautious or aware of the possible downside risks, okay? But there's going to be fantastic trading opportunities both ways. So I hope that's made sense for today's stream. I've tried to keep it fairly objective, fairly level-headed. We've not talked about being bullish or bearish. We've talked about looking for good opportunities, good risk to reward setups in the market, where I want to see strength, where I'm looking for potential weaknesses when I use the examples of XRP and the examples of SUI. Another thing that you can use as just before I wrap up is that look at strength on the BTC pair. So again, this is SUI here. And that if we see a lower high on the Bitcoin pair that adds confluence to the USDT pair, then guess what? That's another confluence and factor that this could be a reason to get risk off or short the market. If you are bag holding SUI, you might want to start thinking about taking profits. The same way I nailed the markets back in February, March 24. Same way I did it again in 2023. March time, I was very vocally bearish. Bearish in the sense I was shorting altcoins from their local tops because of seasonality. So again, something this year wouldn't surprise me. It doesn't have to happen, but I'm just trying to show you ways of how I'm thinking about the market and how I'm thinking about, right, if alt seasons, well, let's not call it alt season, but if the market is going to reject from this level, can I capitalize and make some money on the way down? And if you're really that emotional, then how is it any different from potentially thinking about the market, right? You know what? Here's a good setup. Are we starting to base out? Is this the lows? Give me a pullback into here. I can probably long this into this level here and probably get a breakout into this level here. Trade done. Why is it any different on the way down? Okay, so you're getting that shift in market structure, significant break, lower low. Okay, higher low, higher low, higher low, another higher low, another higher low, another higher low. Breaks the structure. Needs a lower high or an up thrust after distribution. Gets back inside. That's an even better shorting setup. This to me is weakness, and it'll probably bleed lower down back into these range lows. Then you've got this inefficiency, probably stops here, bounces, probably comes lower down. That's how I'm thinking about markets, okay, in terms of structure. And if I'm wrong, no problem. We all win. All our altcoins go higher. Great. Okay, so that's it. I hope you've enjoyed the stream. I hope you found it educational. Like I said, thank you everybody, as always, for tuning in. I really appreciate all of you for being supportive over the years. I will always get the market right, but what I try to do is just leave my thoughts and hopefully give you educational content in ways you can action or take away and develop your own strategy or understanding how to read price action. And essentially, like I said, I'm not a call service. I'm not a signal service. You know, if you're coming here to look for calls, then you're in the wrong place. It's about helping you guys make your own informed decisions. I try to present information that's fairly digestible. I don't try to make it sound overly fucking complex. This is why I often stay away from like talking about TPOs, order flow, footprint, stacked imbalances. I just tell you the levels where I want to trade and what are the reactions that I'm looking for. It's at those extremes, that's where order flow or tape reading or looking at the delta comes into play. It's when I want to do when I'm looking to execute the trades. But to get into a trade or to even understand where you want to do business, you've got to identify the zones that you wish to trade. There's no point in trying to master order flow trading or footprints or market profiles if you can't get your price action concepts nailed. Price action is the foundation as a discretionary trader. Everything else, like order flow, like footprints, like tape reading, is secondary, confluential factors to execute a trade. So you understand what is actually happening under the hood, what's happening with position, who's trapped, are you likely to see exhaustion, absorption, a delta unwind, are traders trapped, and are they likely to puke? Can you see the liquidations happening into a demand zone? Is that going to be exhaustion of sellers? And now you can start looking for longs, and vice versa on the short sides. Are we looking for exhaustion of buyers? Okay, aggressive buyers, retail start, well, not retail, but top traders start aping in at the highs because they think it's going to go to $9, $10, and before you know it, they're fucked, they're trapped. See you later, low down. Same on XRP. Okay, so that's all I'm trying to think about is sentiment, positioning, flows, execution levels, reasons to execute. This to me would be a fantastic setup. It may not even happen. We could just bleed lower down. But if it does, that's where I want to do my business. All right. But apart from that, I wish you all a fantastic remainder of January, and I'll catch you in February, and we'll look to get the private group started towards the middle of February, and then that's it. I'm going for a break in March. God bless. Take care. Peace out. Hope you've enjoyed the stream, and wish you all the best for FOMC. Bye-bye.